With that, Robert, you busy as per usual. I know earnings season, you're always working hard over there and posting earnings, sitting on conference calls, and discussing the breakdown of the results for the users. One such name that we had yesterday was Skechers USA, ticker symbol SKX. So I know this is one of the names that you wanted to talk about today. You want to break down the earnings for us?
Yeah, sure. It's a name we've been following for years and years. Actually, they've been in and out of the GROWX rankings probably for 7 or 8 years now. And so basically, this was a really good quarter for them. The stock's up 16% today, and it followed on a really nice quarter in Q3. So Q3 and Q4 were good, but Q1 and Q2 were poor. The thing with Skechers, it's kind of a boom bust stock. They seem to always have big moves around earnings. Either they have a horrible quarter and the stock gets killed, or they gap up on a strong quarter. So this was one of their good quarters, so that was good to see. So just kind of my quick take on it. Oh, I'm sorry, go ahead.
Real quick, one of the things that I've always noticed for Skechers is around their inventory, which I think works into that boom or bust cycle. Is that still a prominent part for them right here? Or?
It does. It is, because the thing is they don't really always control their inventory, because most of their sales is wholesale. They do have Skechers retail stores, but the vast majority of their revenue is at wholesale. So they can't really control what TJ Maxx or Finish Line or Payless Shoes, what kind of inventories they're holding. So that does kind of they don't really have as much control over their supply chain as other companies would that have a direct their own retail stores. So. But yeah, that's just something to keep in mind with Skechers, and that's why their comps were actually pretty poor, like up 1.1%. But again, that's just their
Did we have an estimate for them?
I'm not sure if we did or not. I'm not quite sure.
So when you're saying they're poor, you're saying in comparison to some of the other retailers that we've seen, basically.
Well, I'm saying it's less important of a metric because not many of their sales are through their own stores. Most of their sales are through third parties. So, and those don't get picked up in the comp, if that makes sense.
Yeah, no, that makes sense.
Sure. So anyway, so the comp wasn't too great, but people don't seem to be worried about that. I mean, it was a nice beat, just a good quarter overall. This was the holiday period, probably their second most important period. I mean, the back to school is a huge area for them, and Q4 is probably the next biggest thing for the holidays. So it was good to see some good results this quarter.
All right. Now, so this is in the GROWX right now, or would this be working its way back in following this quarter?
It's not. I don't believe it currently is in there, but it may get added back depending on how the scan. We're going to run the scan later today or first thing Monday morning, and we'll see what happens. But it could now, because now it actually has some good relative strength, so it may get back into the rankings, but I'm not quite sure at this point yet.
Really strong international results there, particularly in China, which has to be sticking out to you.
Yeah, it's funny. Actually, the majority of their sales now are international, which was kind of surprising. China's a huge thing, and they're actually getting more and more into India. That's kind of like their next tailwind, they're hoping. They only have about 220 stores, but they're going to add 80 to 90 stores in 80 to 100 stores in 2019 alone. So they're going to increase their store base by up to maybe 50%, which could be a nice boost. And not so much in 2019 as they build out the stores, but certainly by 2020, that should be a nice tailwind for them. India's, I think it's the second largest country in the world behind China, like 1.3 billion people.
That's about 2.5 billion people between the two there. So
yeah, it's amazing.
To get into, right?
Yeah, they're definitely going after the big countries. I think maybe a quarter of the world lives in China, or 20%, and then India is another 10%. So you add those together, it's almost a third of the world, probably a little over a third of the world lives in those two countries in terms of population. It's really so they're definitely going after those areas, which is good to see.
And valuations are still pretty fair for SKX, even though it's run from 21 to 32 over the last 4 or 5 weeks, right?
Yeah, I think it's generally pretty good. I don't have it in front of me at the moment.
13.9 times forward PE at the moment, which
it's
pretty favorable. I don't know where that would fall into, say, a Deckers at all or anything like that. But who would you say is the best comps for Skechers?
It's hard to say. They're kind of a unique brand because they're a little bit different. They're not low end and they're not high end performance. They're kind of in that, they kind of split the difference, and they're able to stay pretty well on the price, and they still give good quality. So they're kind of unlike, kind of like any other brand, and all they do is footwear. They do just some, apparel, but it's mostly footwear. But they're kind of like a one-off, I think. Which is hard to say in the retail space, but and what's another interesting thing about them is they actually appeal to all types of people. They appeal to moms, dads, kids. I mean, it's rare to see a brand that appeals to the kids and to the parents at the same time. It's just they just seem to do a good job that way. And they also do a good job in terms of like celebrity endorsements. They do a lot of ads. I don't know if you saw the Tony Romo ad, which I thought was effective, and the Howie Long ad. I mean, I have big feet, so like he's sitting on a plane. He likes the wide thing with the wide shoes, and that's a nice selling point for a lot of people. So I just think their ads are pretty spot on. They get right to the point, and they explain why the product's great and things like that. So they don't kind of worry about imagery and all that stuff. They just kind of get right to the point, and I think it's really effective.
Yeah. One of my favorites, Joe Montana, is always pushing their wares. So
I'm not sure if that one's still current, but yeah, it's that's another good example. But yeah.
All right, let's move on to a name that you originally brought up in our January 4 discussion, was trading around 73, 74 at that time. Now we currently have it at 84 after a pretty wild ride around earnings. That would be Grubhub. Perhaps you could explain to us, I know you were on the call, Robert, where we saw that nice reversal, but perhaps you could explain to us why we sold off so heavily in reaction to the earnings report, and why we saw such a meaningful reversal during the conference call. What were the key things that people were looking at?
Yeah, sure. I was definitely sweating bullets yesterday for sure, because I did recommend it as a 2019 play in mid-December around 76. So it's kind of, and it was down to 60. I did put a stop loss limit in the 64, 65 areas, and I think that should remain in place if anyone is interested in it. But so basically the quarter was poor. Everyone expected a bad Q4 result. The company told people in October, in the Q4, we're going to spend a lot more on marketing, and we're going to spend more on investments. They're branching into 125 new markets, so kind of smaller metro. They're already in the big metro areas, but they're going into like smaller and mid-sized metro areas, and then they're really spending a lot of money to build that up. So
and that spend's pretty significant too, right?
It is.
Didn't they cut their EBITDA by like 40% or so?
Yeah, they did. I think the consensus was around 70, and they're saying they're going to come around 40 or 50, and they came in within that range in Q4. The problem is, and the reason the stock sold off, is that the Q1 EBITDA guidance was also well below. Investors were thinking this was going to be a one-quarter event in terms of the hit to EBITDA, but it sounds like it's going to be a little longer term.
For Grubhub, with that type of marketing spending, I mean, is that just TV ads, actual advertising on the internet?
Well, it's a combination of things. It is more marketing. You probably have seen more commercials for Grubhub on TV. They're also investing in terms of hiring new drivers. When you go into a new market, that costs a lot of money. You have to hire drivers, and you're not making much money because it's still new. Let's say if they go into a city with 100,000 people, a lot of people don't even know Grubhub's there. So they have to have a lot of upfront costs in terms of hiring people, getting drivers up to speed. They have to get restaurants to agree to use Grubhub. So there's definitely some, they don't hit the ground running when they go into a new metro market. So that's also a big part of the investment, in addition to marketing. And the final thing is they're doing more free delivery. Like Taco Bell is doing they announced a deal with Yum Brands late last year, where Grubhub's going to be the exclusive delivery service for Yum Brands, which, Taco Bell, Pizza Hut, KFC, that's a big partner to partner up with. And so basically Taco Bell is doing advertising where they're doing free delivery, and Grubhub is the delivery component of that.
Did you do exclusivity with that?
I believe they did, because
that's got to be pretty big there, right? Because I would be surprised that companies would want to even get involved in exclusivity with something like that, thinking that they'd rather have it open to the lowest bidder.
Well, they do, but actually, Yum actually took a $200 million stake in Grubhub when they did it. So they actually have an ownership stake in Grubhub. So they have that kind of makes it a little bit different than just a restaurant going with multiple places. But that does kind of bring up a good point. Is competition is definitely a concern with Grubhub. They get asked about it I've listened to a number of their calls, and every call they get at least 2 or 3 questions on the competitive landscape. You can hear them sighing every time they hear about it on the call. But it's definitely it's a concern. It's a concern of mine. It's a concern of a lot of people. Their response is basically that there's enough white space out there for everybody. There's just so many. They're still so early in the transition from offline to online that they said there's plenty of room for everybody. But it is definitely a concern because you think it would be it's kind of a low barrier to entry market, but we'll see how the next few years play out. But right now, they say they see no impact on their churn, they've seen no impact on their growth, and they just keep going into new markets. So they don't seem very concerned about it.
When you talk about churn for Grubhub, I understand churn for say like a Netflix or something like that before just canceling. How do they measure churn for Grubhub?
I'm not exactly sure how they measure, but they probably measure it based on users who, how active they are over maybe a 6 or 12 month period. Okay, they spent $15 in last month, and then nothing this month, and nothing this month, and nothing this month. They might have a thing where if they go 3 months in a row with 0 usage, maybe that's considered churn. I'm not exactly sure how they define it, but but they did say that the churn was not a huge issue for them.
Okay. So do you have any sort of price target on Grub?
I don't have a set price target. I kind of alwa't think those are kind of like artificial. Right. I used to work at Citigroup, and our analysts just hated doing them because they're just kind of, it's just a marketing ploy basically for the investor. So I don't really have a sense for that, but I think it's I still like it as a 2019 turnaround play just because the stock is down so much. And the thing is, and they made this example on the call, and I think it's a good point that management made. A few years ago, they also took a huge hit to EBITDA in 2015 when they actually started doing the delivery for themselves, and that hit the stock then. It hurt their EBITDA then, and they actually made the comparison. What they're doing now in terms of expanding to 100, 125 new markets is similar to what they did in 2015, and the stock did really recover nicely after they did that delivery component. So I'm hoping that the same thing's going to happen now once they get through this. It's going to take, it sounds like they're going to be spending the next few quarters, but I'm hoping like late 2019, early 2020, they're back to normal in terms of EBITDA per order. That's a metric they do play close attention to. But, I think it definitely keep a stop-loss limit here. The competitive landscape is definitely a concern. I had it in the 64, 65 area, and it almost hit that. It went down to 66 yesterday, so
66.
Yeah, it almost got stepped out. But I think now it's kind of rebounded. I kind of feel a little bit better about it. You may want to bring that stops up a little bit just to reduce your risk, but I wouldn't hold it below that. If there's something below that, then I think there's something fundamentally wrong with the story that you might want to be concerned about. But overall, I think I still think I like it as a 2019 play, just given where the stock is, and I also like how it rebounded so much during the call. It really put a lot of people at ease, because they were pretty positive, and they kind of had some good explanations for what investors were concerned about.
All right, and then the last play that we're going to talk about here, this will be a good one. We'll have to bring you back around to circle around after they report earnings. It's CyberArk Software, ticker symbol CYBR. You have an explanation for them as basically a cybersecurity play for privileged accounts. I kind of read that as intra-network accounts. It seems like basically keeping a separation between customers and the the actual employees at the company. I don't know if that's a good way of looking at it. And again, they will be reporting earnings February 14th. So why don't you tell us what you like about this story, Robert, and what we should be looking for earnings?
Sure. It's an Israel-based provider of IT. It basically is a cybersecurity play, and their software. What they do, like you mentioned, they do focus on what's called privileged accounts. If you work at a company, if you're a secretary or a receptionist, or if you're just, in the accounting department, you're going to have different privilege rights than you would if you're an IT manager. You might have, you don't have access to the servers, the routers, things like that. So those are called privileged accounts, where people have much higher access to really sort of the real nuts and bolts of a company's network. So basically what they do is if you were to get privileged account access, you could do a lot more damage than you could if you just had a user who didn't have privileged access. So CyberArk focuses on the privileged account aspect of it, and a big reason it's important is that because as cloud just as everybody's going more and more to cloud, sort of the endpoints of all the threats are just expanding. It's hard to really protect against all of the potential in places where like hackers could get in. So what CyberArk does is like, well, we're going to lock down privileged accounts with like massive and just devoted security just to that part of the network. So it's I think more and more companies are really understanding this as a really important part of it. The company went public in, I think it was 2014, and since then they've doubled in revenue. They more than doubled their customer base. They have like most of the Fortune 100 are in use CyberArk, and I think they're just becoming more and more. The market's becoming more and more aware of them. And I like how the stock was trading. It's just been a monster. They didn't even care about the tech sell-off in October. I mean, the stock went down a little bit, but it's already above that now, and I just think it's a good play. They're growing really strongly, and they do report next week. So I wouldn't necessarily buy it before the report. I would kind of wait and see how the numbers come in. But it's just definitely a name to keep on. It's one of my favorite cybersecurity names for sure.
All right. So they are the three names that you're bringing to us today, Robert. Anything you'd like to add? Do you want to do any early marketing for the GROWX list, and when we should be expecting that to be posted and keep an eye out for it?
I'm not quite. Well, it'll be posted on Monday afternoon, and then the following week I'm actually out of the office. Monday's a holiday, and then Tuesday I'm out, so it'll be posted on Wednesday. But you'll just have to stay tuned. I haven't run the scan yet, so I don't want to.
This upcoming Monday is a holiday?
No, the following Monday.
Yeah.
This coming Monday, it'll be published in the afternoon.
Okay.
But then the following Monday, it'll obviously because of the holiday. But then the 18th is the. Not this. Correct. The 11th it'll be published. The 18th is the holiday. So.
Okay.
But yeah, so I haven't run the scan yet, so I'm not exactly quite sure what the changes are going to be just yet. But definitely keep an eye out. We'll run it through in play, and then also you can always find it on the emerging growth page under investing and trading, and then you go down to emerging growth, and all the rankings are there. So feel free to give that a look if you get a chance.
All right, that sounds perfect. Well, Robert, I know people appreciate you popping on and providing some thoughts on some ideas out there. So thank you very much for coming on yet again. And we'll be talking to you shortly. Maybe we'll follow up with you on CyberArk after those results come out and see what you think.
Sounds good. Thank you so much. Have a good weekend.
Talk to you soon. Bye-bye.